Russia's state news agency recently claimed that the West stands to lose assets, estimating that at least $288 billion worth of frozen Russian assets could be confiscated. With the European Union and the United States implementing their latest round of sanctions, the situation raises an important question. Could these aggressive measures against Russia backfire? In a surprising turn of events, Russia has retaliated with countermeasures, targeting Western-owned businesses and assets in the country, particularly those belonging to U.S. and EU banks. This escalation in tensions between the West and Russia is setting the stage for significant geopolitical consequences. On December 28, 2024, Russia's foreign ministry responded to the new sanctions, outlining a series of counteractions. These measures, intended as revenge against the U.S. and EU, were expected to have serious implications. But how will they affect both sides? What will the West's response be? In this video, we will delve deeper into these questions. The European Union's latest sanctions, announced on December 16, 2024, were part of the 15th sanctions package against Russia since 2022. These economic restrictions are designed to isolate Russia even further, both politically and economically. In response, President Putin's government has implemented countermeasures that are likely to target over $280 billion worth of Western assets within Russian borders. This sets the stage for a new phase of geopolitical tension between the U.S., the EU, and Russia. But how will this affect each side, and what challenges will emerge from this escalating conflict? Interestingly, the West holds a substantial advantage. In terms of the value of Russian assets, it has frozen compared to what Russia can seize from Western entities. As of recent estimates, the West has frozen approximately $300 billion in Russian central bank reserves and other assets globally. This includes funds held in various financial institutions across Europe and the United States. European banks hold the largest share, about €207 billion, followed by U.S. institutions with $67 billion and the UK with $37 billion. Japanese financial institutions hold $36 billion in yen, while smaller amounts are held in Canadian dollars and Australian dollars. These funds are primarily invested in foreign securities, bank accounts, or transactions, making them easily identifiable and accessible for Western governments to freeze. In addition to the state reserves, Russian billionaires or oligarchs have faced severe crackdowns. Their yachts, luxury estates, and even private jets have been seized by Western authorities. For instance, Germany took control of Alisher Usmanov's $750 million yacht and $90 million in real estate. In Jersey, authorities froze $7 billion in Roman Abramovich's investments. Italy seized the stunning Sardinian villa of Nikita Mazepin, valued at over $114 million. Other European countries like France and Spain have also confiscated properties and yachts belonging to Russian elites, bringing the total to about $58 billion. Western governments have coordinated through a task force called REPO, Russian elites, proxies, and oligarchs, to track and seize these assets, with banks playing a significant role in identifying and holding Russian funds as required by law. When comparing the two sides, it becomes clear that the West has the upper hand. The $300 billion frozen from Russia's central bank, combined with the $58 billion in seized assets from oligarchs, dwarfs what Russia can seize in return. However, this has not stopped Russia from passing a decree in July 2024 that will legalize the process of seizing these Western assets. But will Russia be able to execute this decree successfully? The assets frozen by the West are largely centralized, held in financial institutions that are easily accessible for enforcement. In contrast, the $288 billion in Western assets within Russia are more decentralized and spread across various sectors and companies, making them harder to seize in a coordinated manner. While it may be difficult to seize all of these assets, it is not impossible. and the West is taking this threat seriously. So, how does Russia plan to carry out these sanctions? Russia has adopted a tough stance in retaliation to Western measures. The Kremlin's response has been targeted and strategic, aiming to make life more difficult for Western companies operating within its borders. If a company wants to leave the Russian market, it is forced to sell its assets at a 50% discount, which means businesses must accept massive financial losses just to exit. Additionally, a tax of up to 35% is now imposed on asset sales, an increase from 15% in October 2024. This departure tax is clearly designed to impose significant financial burdens on foreign companies while providing a financial advantage to the Russian government. The situation doesn't end there. Western companies are also facing tight restrictions on how they can move their profits out of Russia. By limiting the repatriation of revenue, Russia is ensuring that money stays within its economy, rather than being sent back to Western headquarters. This strategy not only complicates operations for foreign businesses, but also serves to stabilize Russia's economy during a tough period. Furthermore, Russia is targeting individuals, such as EU officials, by banning them from entering the country. This makes it difficult for these individuals to reach any resolution with the Russian state, and could have diplomatic implications as well. Big names like Carlsberg and Danone are already feeling the effects of these measures. Carlsberg, a major player in the Russian beer market, is facing stricter government oversight and is being forced to sell its assets at a steep discount, resulting in enormous financial losses. Similarly, the French food giant Danone, which has significant investments in Russia's dairy sector, is grappling with the restrictions on taking profits out of the country, making it difficult to manage its global operations. In December 2024, a Russian business owner took over all of Danone's operations in Russia, finalizing the Russian takeover of the French company. The situation goes far beyond just Carlsberg and Danone. Larger companies are also trapped in this situation. PepsiCo, for example, has been operating in Russia since the 1970s, building a massive operation with local brands and manufacturing plants. Now, with sanctions in play, Pepsi faces serious obstacles, including restrictions on taking profits out of Russia and the likelihood of selling its assets at a hefty discount. This could mean not just financial losses, but significant disruptions to the company's supply chain and workforce. Interestingly, both Pepsi and Coca-Cola continue to operate in Russia, but cannot move any profits out of the country. Similarly, ExxonMobil, which invested billions in Russia's oil and gas sector, had to leave without taking any assets with it. The company's Russian ventures are shrinking dramatically due to steep taxes and the potential for expropriation. Ford, once a significant player in the Russian automotive market with local manufacturing plants, now faces possible seizures and forced asset sales. These sanctions are not just hitting revenue. They are reshaping how these companies operate in a geopolitically volatile region. On the European side, Unilever, known for its diverse portfolio of food and personal care products, has several factories in Russia. In October 2024, the sanctions forced the company to sell these facilities at a loss, while making it nearly impossible to repatriate profits. In the tech sector, Siemens, a major technology provider with a large footprint in Russia, faces the risk of having its infrastructure investments seized or heavily taxed. Before that happens, the company plans to sell all of its assets to Russia. The situation goes beyond financial losses and legal battles. It involves operational disruptions and increased costs, forced asset sales at steep discounts combined with new taxes make it difficult for foreign businesses to operate or even leave without enduring substantial financial pain. The global impact of these sanctions is also significant. Potential. Investors will likely think twice before entering Russia, leading to a reduction in foreign direct investment. Industries such as energy and consumer goods, where Russia plays a central role, could experience supply chain disruptions across international markets. This raises a critical question. How will these challenges reshape the long-term strategy of Western companies in Russia? Will they adapt to the new reality, or will they retreat entirely, leaving behind a market once filled with opportunity? The impact of Russia's retaliatory measures extends far beyond individual companies. It has the potential to reshape the global economic landscape and force businesses to reconsider their strategies in an increasingly unpredictable geopolitical environment.